Hi, my name is Leon Rowe, currency trader and trading coach at trading180.com, and welcome to this video on the pound dollar setup and whether really this is the right time to sell the British pound and buy the US dollar at this exchange rate. Now, I'm going to be looking at this from a support and resistance and also a supply and demand perspective. But first, let's analyze this level from a support and resistance perspective. So what we have is a pretty clear and obvious level, right, where prices have come down, right, and been rejected, and then we've come down again. We've pretty much bounced right off it. If you're looking at, this level right here, it's pretty much like, bounced right off of that level there. And then you have a bit of a move up, and then you have a move down. Now, what's commonly taught in the Forex trading books and online is that support, and this would represent, some support, should become resistance at this area, right? So there's going to be a lot of traders. This is the daily time frame, but probably on lower time frames like the hourly, getting in and trying to get in short, right here. And you can actually see what's been happening right here, where traders are probably being, stop hunted right here. And the reason why I mentioned stop hunts is because what happens is in the Forex market is that there is a zero-sum game going on. For someone to win, someone else has to lose, and your moves against support and resistance are very, very obvious, extremely obvious. And then that's not to say that these moves, support and resistance doesn't work, but support and resistance isn't an edge, really, in my opinion, in a sense that it's everybody can see it. Like, it's support and resistance is just anybody can learn it in 5 minutes, 10 minutes. Yes, it takes maybe a bit of time to get your eye in and see, but an obvious level like this, right, especially on a daily chart, which most traders at least have a look at on the higher time frame charts, are going to see this level and start going down into this lower time frames to look for some sell trades. Right now, I want to argue that this is not the best place to sell and to get short. Yes, prices could react and obviously continue to go down, right? But that's not the point here. The point is that you want to try to look for trades at areas of value, right? And support and resistance doesn't always represent the best place of value. Support and resistance just tells you where there was previous supply and demand, but not necessarily where there was a area of your traders were buying at a bargain price, wholesale price, etc., right? A cheap and a bargain area, right? So if you're new to supply and demand, I'll go over this, and what you really want to do is look for prices, if they do, to come up to here. This would be the best area to look to buy, right, if prices can get up here. And this is because we know that this is the source of supply, right, that pushed prices below what was considered a bargain area. We had some demand here, so what I'll do is I will go back and to do bar replay. Now, in real time, this is what was seen. Right, so I'm saying in real time, but on December the 6th, this is all that traders saw. And so traders were buying and they thought this was cheap and bargain area and wholesale prices for the British pound. Right? Or this was an expensive area for the US dollar. Now, what's happened is we fast forward day by day, right? And now prices have pushed past what would have been considered a previous expensive area for the dollar, right? This was an expensive area, right, because traders were no longer interested in selling or buying the dollar and pushing prices below around December the 5th, 6th, right? But from the 7th and the 10th of December, we know that there was demand for the dollar. right? Hence the supply. When you're buying the dollar, you're pressing, you have to press sell, which is supply, right, on this exchange rate currency, right? So we know for a fact that something's happened and there was demand for the dollar, which pushed it past a previous, and this would have been an expensive area for the dollar. So this is going to be the strongest area of supply, and this is the where were bargains, where the institutional traders were buying at wholesale. This is where breakout traders were probably trying to get in and buying at retail. And if we again forward to present day, between what we would call a cheap level, right? It's bargain prices, wholesale prices, and this would be an expensive area. Down here is expensive. Why do we know that to be expensive? Because there's no more demand for the dollar, right? Prices aren't going any lower, are they? Right? So buyers are no longer interested in buying the dollar at this exchange rate, this 1.2485 for now, until something obviously changes. So between this level here, right, this cheap level and this expensive area, where are we? Right? Where are we? We're somewhere between what would be known as fair value. Right? So between that high and that low, we are now, so expensive or bargain area, matter of fact, for the dollar, an expensive area for the dollar. This is now, and in between that would be what we'd call fair value. So fair value isn't always the best place to buy a currency. Yes, again, I'm not saying that this trade can't work out and prices can't reverse from here, but what I want you to do is think about taking higher probability trades, right? And the higher probability trade is not trading and buying the dollar at fair value. You want to look to buy within a supply zone which was proven to be a bargain area, right? This supply zone, supply and demand zones represent wholesale prices, bargain prices, cheap prices. This was proven to be cheap. Now, if prices do come up here, we don't know for sure. Again, we're just basically trading probabilities, but the point is that this is the area that you should be looking at, around this 1.28 area, right, is the first area you should be looking at, all right, to try to get short. Now, to expand on this as well, we also have several supply zones within this area, right? Another one being right there. And if you watch, there's a link in the YouTube description below regarding how I draw supply and demand zones and why I draw supply and demand zones as well, with an introduction into supply and demand, the beginner's guide, and also a video regarding how I draw using candlesticks. You'll understand that this is making lower highs and lower lows, and this would be quite a large area of supply. So what I'm going to do is I'm going to clear this up, and I'm also going to give you some levels with which to actually look for prices coming back into this area. Right, so we still use support and resistance, we just don't use it how everyone else uses it, which is basically by itself. What you want to do is understand where value is first, and then understand where other traders within this value area are potentially buying or selling. And for me, I can see an area around here where we have some resistance, support, bit of support there, some support there, and resistance within this zone, right? So what we're going to have is value traders like myself, supply traders who are looking to buy at wholesale prices. You're going to have traders who do trade support and resistance, also looking at this level here to look to get short And if they're looking to get short, that adds to the what? Supply and demand equation. If you manage to pick off the lows here, as far as you manage to buy anywhere around here and you're looking to take profit, if you're not taking profit here, then you're definitely going to take profit within this area here. And if you bought here, you have to sell to exit. Right? So net there should be supply orders in this area if prices can get up to this area here, this 1.28 area, within a proven area of value. The second area I'll be looking at is going to be probably within this area here, where we have, again, go back a bit, got a bit of support, resistance, bit of support there, support, got some resistance here. So again, around this 1.29 exchange rate area is where I'll be looking to get short a second time. And why am I getting short? Simply because of fundamental and sentiment reasons regarding the dollar and the British pound. The British pound is going through Brexit at the moment. It's not looking, great for, Theresa May, the Conservative Party, and the actual deal. Potential second referendums. There's a lot of uncertainty going on. The dollar at the moment has better economy. It's got its own probably problems with trade wars, etc. But on the face of it, I would probably be going for the US dollar as the currency to buy if I was looking to buy any of these out of the two. Again, this could change, but as things stand now, this is where I'm looking to potentially get short on these are the areas. So again, why are you buying here? Is this the best place to buy? Yes, prices could turn around, but that isn't the point. The point is you want to take higher probability trades, and the higher probability trades are at areas of proven supply and proven demand, because you know that this is where institutional traders, this is where traders who move the market, the financial institutions, got in and bought the dollar, right? Because they thought it was an absolute bargain at this price. When prices return to this area, this is where we have a good chance of this being a bargain again, right? So hope you found that useful. If you do have any questions, just email me at info@trading180.com, or you can comment in the section box below and I will endeavor to get back to you ASAP. Hope you guys have a great trading week, and till the next video, take care.